Analysts at Norrenberger say that they expect the risk-off sentiment in the Nigerian equities market to persist as profit-taking in the mid to large stocks are expected to continue until the end of the third quarter. Samuel Oyekanmi, the Group Research and Insight Associate at Norrenberger, joins me now for a midweek review of the markets. Thank you so much for your time today, Samuel. And let's get into what's driving sentiment for investors today and what are some of the underlying drivers of the risk-off sentiment in the market?
Yeah, thank you very much. Just like emphasized, right, the market had done significantly well in a couple of weeks, extended about 26-day run, bullish run. The ASI went as significant highs over those 26 days. But of course, as you would expect, when the market rises that fast, there will be at some point some levels where a number of investors will try to take profit, especially for retail investors and FPIs in some cases, and that's what we've seen. So in the last 8 days, about 4 or 5 of them, we've seen the market post some bearish movement. In fact, yesterday recorded the highest loss since January 7th or 8th, thereabout, and that's quite significant, speaking to the amount of profit-taking activity. I mean, there's been around some very stable stocks that have done well. The likes of Dangote lost about 10% yesterday, and that really pushed the market downwards significantly. Factors, of course, it's profit-taking. The market has done so well in recent months. You would always find pockets of time when investors will always want to realize some of their earnings and then look for other strategic points where they can come back into the market again to replay. But do we still see the market as a positive market? Yes, we think so.
Yeah, because looking at the year-to-date returns, we're seeing the all-share index doing about 38% year-to-date. Looking at how it compares with our peers across the region here, looking at the Ghana Stock Exchange doing about 51.7% and the BRVM Composite Index doing about 15%. How would you rate the performance across the region?
Yeah, I think equities has been quite good, and beyond just the African continent, has been general across the world. You look at other markets, the US, from a year-to-date point of view, and then you look at other CAC, France, CAC, DAX, and all that, you see that they've recorded some relatively very quantifiable gains year to date. And the same thing we've also seen here in the African region. Don't forget that we're coming generally across the world from a point of high interest rates in the fixed income side of things, and then it's beginning to taper down. And what you find in those times is that a number of funds will start moving from the fixed income side to the equities side of things, and that has played significantly well for the African region and again other regions again in the world. So equities is really doing well, and I think that's quite a nice development. And the more interesting is the fact that it has been printing positive returns in the last few years across the region. I think that's quite a welcome development.
Well, let's look at catalysts for the market here. One key one will be earnings here. We're seeing some of the big names in the banks more or less extending their the results announcement here. Speak to how that impacts the market here and also sentiments for banking stocks.
Yeah, as we would see, banking stocks was one of those stocks that were really hit in the last 8 trading sessions alongside industrial goods, and that speaks to of course, the expectation of what investors are looking out for. One of the things that drove the market was the expectation of high earnings from companies generally, including the banking sector, and a number of investors had bought in, and that had drove rally in those stocks. But of course, there will be some level of correction when that result comes out. And as it's almost like a norm every year when it comes to half year, because of the regulation around the banking sector, there seems to be a lot of delays in releasing their audited financial statements. And just like you would always have before now, we're also seeing that play out now. But the downside to that is that investors are trying to anticipate what the earnings is going to look like and would rather take profit than when those results come out, and they might probably be underwhelming. But do I think it's going to be underwhelming? I really don't think so. The environment still favors the banking industry in terms of earnings.
But let me get your take on how do you see the market going down the line and for the end of the third quarter, and when do you think we could see some bargain hunting returning in the market?
Yeah, I think it's going to be pocket in, pocket out, right? There's going to always be in and out between now and even the end of the year. But generally, the market is going to be bullish. But again, the market is already doing close to 40% year to date. What you find is that there will be some point where investors would take profit, realize their earnings, and then come back into the market. H2 is gone. Of course, we'll start envisaging returns from companies by Q3 2025. So by the end of September into the beginning of October, you see a number of players also trying to re-enter the market, trying to project, again, outlook of expectation of some very impressive returns, especially from the consumer side, consumer goods side of things. And that could also drive some level of rally in the market.
All right, but in terms of the sectors or themes that you think investors should be looking at, what should we be focusing on for the rest of the year?
Yeah, I think look at it two sides, right? Look at again, Broadway, Nigerian economy looks like it's positive, right? But again, you also need to look at the tone of the CBN. Inflation result came out during the week and headline inflation slowed. But month-on-month inflation rose again. And what that also suggests is that the CBN might not really be cutting rates anytime soon. And if that continues, that also tweaks the direction at which investors will be looking at, be it the fixed income space or the equity space. If the interest rate is not going to, the CBN is not going to cut interest rate in the short term, that means that the fixed income environment will still be appealing to investors, and that could incentivize the amount of movements that we've seen in the equity space. So you might find people trying to, take off from the equities markets, reallocating into fixed income. So I think any investor should be able to look at these dynamics happening in the market, the tone of the CBN, interest rate movement in the fixed income space. That would also help you to play around in the equities market.
All right, thank you so much for your time on the show today. Samuel Oyekanmi, the Group Research and Insight Associate at Norrenberger, talking about the equities markets here in Nigeria.